So a lot of businesses in Australia are small business. So let's talk more specifically to them. You know, so you're a company now, you're turning over some good money. You know, maybe a husband and wife might be operating in the business, one full-time, one part-time, or whatever it may be. At what point do you go, I'm going to set up a family trust? You know, and is it just for tax purposes or is it for other gains as well? So maybe to share a bit of that.
Yeah, well, a family trust, just to be clear on how the principles of that is, a family trust gives you flexibility. That's the main reason that you have a family trust. So they're not like a company, as I said, pays tax at 25%, or an individual pays tax based on their level of income. A family trust actually doesn't pay tax at all, but that's not why you have it. It's just like a vehicle where the money comes into it at the top and then you get to decide out the bottom where it flows through to. So, you know, in a circumstance, just to throw one out there, you might say, okay, mum and dad are working in the business. They want to get 50% each out of the business in the family trust this year. And that works beautifully. So, you know, they each take, 50% of the profits out of the business. And then next year, mum decides that she's going to have a baby or whatever it might be. And so she's not working in the business now. So her income would ordinarily drop. So we've got the flexibility to change the distribution based on those sorts of circumstances. Or there's a year where there's a capital gain in dad's name or whoever it might be. You can spread the distributions based on those changing circumstances. So family trust is all about flexibility. You sort of said when or what's the trigger as far as kicking off a family trust. And I suppose the answer is optimally you set that family trust up early in the piece because when the profits do eventually flow out of the company, the family trust is the one that receives it and you've got the ability to spread it around. If you try and set it up down the track, there's some rules where if the value of that company that you're transferring or adding shares to exceeds $150,000 worth of value that you're moving, you trigger capital gains tax. So you want to be in a position where you've set that family trust up to own the vast majority of the shares prior to the value of the company being shifted being more than 150 grand. So ideally you kick it off at the start.